FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's 9/10/18, and before you know it, September will be gone. We'll hit the volatile fourth quarter. October, always an interesting month for the markets. And as always, we invite you to be part of the show. Just email us, kl@kerrylutz.com. We answer all. Well, Bitcoin, interesting developments in cryptocurrencies, SEC involvement with these so-called trackers. There's a lot going on in the space. What can we look forward to from regulators in the future? Because they're not going to be able to keep their nose out of the tent. You know that. And perhaps there's good reason for regulators to be involved. There's a reason why I call these things kleptocurrencies. And you know that when I was at the North American Bitcoin Conference, forget it. I mean, you could cut the fraudsters. They were just crawling all over the place. Well, someone who is an expert in it, as well as class action litigation, John Dellaportes of the law firm of Kelly and Dry and New York firm. Used to do work with them once upon a time. Hey, John, welcome to the show.
Thanks for having me, Kerry.
So, cryptos. So now we've got an SEC order. You could clarify a bit to suspend trading in a couple of these crypto trackers, which, if I understand it correctly, are stocks that are going to track the performance of the actual cryptos. Do I have that right?
That's correct. It's Bitcoin Tracker 1 and Ether Tracker 1. And the SEC yesterday issued an order on a Sunday suspending trading on both of these exchange-traded funds for 10 days, 11 days through September 20th. And the SEC's order and press release on it says that it's simply a matter of them not having their paperwork in order. These are companies out of Sweden who are sponsoring these securities, which may be the case, or maybe something more than that. We'll probably find out over the next 10 days.
Well, it's interesting because a week ago, Bitcoin was trading at 61.46. It hit a high of 7,300. Now it's got hit a little bit yesterday, 61.88. Now it's at 62.35. So make of it what you will. Bitcoin's trading a lot less like a unique cryptocurrency like it was, like no other item that trades on a publicly traded market in the world. And yet, we see a lot of uncertainty around the currency. So these tracker stocks, I guess probably the SEC's question is the same as mine. How do you track it? Do you just buy a basket of it and then it becomes kind of like an ETF? Or is it like a closed-end fund where you keep it there forever and everybody has an interest in it and kind of it goes up or it goes down? We're kind of in that formative period of this market where very few people out there really understand what's going on.
I think that's exactly right. And that's part of the issue the SEC had. The broker-dealers who are sponsoring these are calling these exchange-traded funds, just like you said. Mm-hmm. But the SEC has some questions over whether that's a correct characterization or not. And I think it's fair to say that the market is so new and so quickly changing that the SEC is very much playing a game of catch-up. Yeah. And probably for the next 1, 2, 3 years, we're going to see a lot of what I'd call topsy-turviness, while the regulators and the market knows just what to do with this.
Mm-hmm. Yeah, it's the Wild West out there, even still. Mm-hmm. We were talking pre-call about painting the tape, and that's where the markets are so thinly traded. A couple 100,000 Bitcoin transactions per day is really nothing. I mean, you could get that in the first 15 seconds of trading when Wall Street opens in the morning. It's a nothing, shallow, thinly traded, whatever you want to call it, security or crypto. Choose your poison. But it's so easy to manipulate these cryptocurrency prices, because you just go in there and you buy a whole lot, and whether you do it orchestrating it with other buyers or you sell a whole bunch into the market and then gobble it up when the resultant price crashes, and then wait for it to go back up and sell it. I mean, you can identify these trends in the market, these blips, John, all the time. They happen multiple times per day.
Well, that's exactly right. And invariably, with a newly developed security, there is a risk of market manipulation. And I would say the risk here is heightened by just the fact that the cryptocurrency world is so opaque. So, for example, if you buy a penny stock, theoretically, at least, you can go to the company's filings and see if they have assets and liabilities and what have you. Now, there could be still fraud and market manipulation, but there's something behind that. And even with the currency, you can assess the strength of the country's central bank and their interest rate policy and their fiscal policies, and you can make some judgments on that. With cryptocurrencies, it's all backed by an algorithm that, frankly, nobody understands what it is and what it means. That said, the cryptocurrency market as a whole has now gotten significant enough and with established enough players entering it that most sophisticated investors I talk to who are looking for a balanced or diverse portfolio will have some small percentage invested in some fashion in cryptocurrency. So it's a reality, and most people go into it with eyes open.
Mm-hmm. Well, you have to. You don't want to be putting all your eggs in one basket. You don't want to be taking out a mortgage on your house to go speculate in something that is totally speculative, right? I mean, it doesn't get any more speculative than cryptocurrencies, John.
That's exactly right.
So
you do not want to take out a mortgage on your home to trade on this. If you are a sophisticated investor who can afford to take risks and lose money, then this might be an appropriate investment for a very small percentage of your overall portfolio.
Yeah.
But that's really the only situation.
Mm-hmm. Yeah, I get it. So how do they get a handle on this? We were talking earlier, do we need a global cryptocurrency regulator? That's really the question here.
Well, I don't think that's ever going to happen, whether we need one or not. There are just too many different regulatory regimes. But the SEC does have very strong working relationships with their co-regulators in the major financial markets, Hong Kong, Singapore, South Korea, London, what have you. So I think we're going to see a lot more cross-border cooperation than we used to. There used to be none before the financial crisis, quite frankly. Maybe a little between New York and London, but other than that, virtually none. And what changed all that was actually the Lehman bankruptcy. Lehman was operating in 100 different countries. And when it collapsed, every single Lehman entity collapsed with it. And it really required regulators to have a lot of cross-border cooperation, which theretofore was unheard of. Yeah. And so this is a trend which has been developing over the last decade, but definitely the cryptocurrency world where nobody's quite sure where, if anywhere, these cryptocurrencies actually exist, has heightened the need for cross-border cooperation in that respect.
I'll tell you what, and the full extent of the potential manipulation, John, in these markets isn't even fully appreciated because there's only 10,000 or so Bitcoin nodes around the world. Those are the nodes that verify the transactions as they come in. There are entities out there that have the computing power to block all 10,000 nodes simultaneously for long or fairly good length periods of time, which would wreak havoc. And the other cryptos have less nodes than Bitcoin for the most part. So there's like a lot of vulnerabilities in this market, a lot of susceptibilities to fraud and manipulation. And it can be done from any place in the globe. You can have a bot network. I mean, it was a couple of years ago, somebody took control of everybody's DVR in the country and use that to attack sites. And it was like hundreds of millions of nodes of sites, of DVRs attacking different sites around the globe. And nobody could figure out what to do about it for about a half hour. And then the problem kind of solved itself.
And remember, Bitcoin, as you alluded to, is the original and most established of these cryptocurrencies. But these days, hardly a day goes by that we don't learn of a new cryptocurrency being established.
Exactly.
There are now hundreds of them, maybe thousands. I've lost track.
2,000 was the last count we had.
2,000?
2,000, and that was 6 months ago. Basically, everyone gave up counting after Bitcoin crashed. Nobody really cared anymore. So everything you've said about Bitcoin goes exponentially so as you move down the food chain from Bitcoin to Ethereum to what have you. So the risks are definitely multiplied. However, as with everything in life, with risks comes opportunity. So for investors who are engaged in speculative investing and can bear the risk of losing all your money, there are definitely great profits to be had. So it's definitely not me. Yeah.
But there are people out there who can bear the risk and apparently made a lot of money on this.
So you think they're here to stay, though, huh? The cryptos is like the Pandora's
Definitely,
box.
and I think it's a function of a lot of things. One is just an advancement of technology. Two, we talk about the dollar being, essentially the gold standard these days, but all the dollar is a piece of paper, and we don't even really print out paper anymore. The dollar is essentially now an electronic currency itself. Now It's backed by the United States, but it's also backed by $20 trillion in debt. And so could be subject to, a great devaluation if ever confidence were lost in the dollar. So there are really no safe investments anymore. There are only degrees of risk. And so if you start from the dollar with $20 trillion in debt, which is considered the safest investment, Treasury bills still pay 1% or something like that, and you work down from there, you realize that there's definitely a need. Now the other thing is the regulation on cash transactions has gotten incredibly burdensome. And I'm not speaking about, international drug traffickers or weapons traffickers,
of course,
or money launderers, but simply the regime of money laundering regulations in the United States, and it touches foreign regimes through FATCA, is quite a burden. And in some respects, the legitimate desire by U.S. regulatory authorities to regulate cash transactions and cash movements has driven people to these alternative currencies where there's less of a regulatory footprint. So that's going to continue.
That's very true. That's a great point. I mean, if you want to take out more than $5,000 from the bank, they could be all over you, right? Before you even know it. It's a lousy $5,000. Not that it's not a lot of money, but it's not a lot of money in the scheme of things. And yet, it's become burdensome with cryptos. Hey, asset protections. Cryptos have a lot of potential applications here. Let's face it. That range from the legitimate to the very dicey. Put it that way, right? So
that's true.
So one of your specialties, Ponzi schemes. So are we going to see crypto Ponzi schemes here?
I think that they bear a lot of similarities. Although one does not think of it, basically a Ponzi scheme is when new money pays for old money. And that's essentially what's happening in the crypto world.
Like Social Security.
New money is paying for old money. There's no underlying investment, unless you consider the algorithm itself to be the underlying investment. But essentially new money is paying for old money. These are a form of Ponzi, or maybe more charitably pyramid schemes. And they match a lot of the hallmarks of those that the SEC lays out. So again, as with everything in life, there are risks associated with it, particularly where there's no real underlying value. And it's not that different from what Charles Ponzi himself did. Charles Ponzi himself was trading these stamps, which had no inherent value except as an alternative form of currency. And when eventually the desire for these stamps by people who were trading them dissipated, the whole thing collapsed in on itself. And so basically we've replaced paper with ether.
Yeah, we really have. Well, what was interesting about that, Charles Ponzi existed in a time many ways similar to today. There was no national regulator of stocks.
Mm-hmm.
Every state regulated their own blue sky, their own share issues. And it was amazing. I remember reading this book that all these states would come, attorneys general, and they would analyze his whole company, and then they would wind up investing in it. And it was really the Wild West, much like today.
That's true. Although remember that even the most heavily regulated industries in the world, I think of our major banks, commercial investment banks in 2008, are capable of a sudden collapse.
Oh, sure.
And capable of massive fraud. So, my answer, what I tell clients is that don't assume that just because something is regulated, it makes it safe. You always have to make these decisions and do your own research. The government is not there to protect you.
No, and they're just there in this case. And securities, their only purpose is to make sure that you crossed all the T's and dotted all the I's, and that you disclosed everything that you were supposed to. But whether it's going to work or not, and so many people don't really understand that, John, is that their purpose isn't to protect you from getting defrauded. It's to ensure that the issuer just went through all the required hoops in order to list.
That's right. That's right. So it serves a function, regulation, in that if done properly, there are materials for you to look up online and check the bona fides for yourself. Of course, those materials can be fraudulent, and no one's really looking to see. They are, as you said, just checking the boxes, but at least it gives you a starting point, which for, versus unregulated securities, they don't have that and are obviously that much riskier.
Yeah, there's something to be said for the cleansing qualities of sunlight, right? It really can make a difference, because at least you have something to go on, right?
Yes, and you have not just regulators, but market forces. So a lot of people speak ill of short sellers, correct? But short sellers are folks who are out there basically studying the financials and the filings of publicly traded issuers and seeing, hey, is there something suspicious here? Is there something that's not quite right? And so when you start to see short selling activity, that's a market corrective. And it's, in a capitalist society, it plays a role.
Yeah, ignore it at your own peril, right? So, fascinating. So we're going to see a lot more developments here, and I can see that the crypto space really does open itself up to all of these, all the worst instincts of the fraudsters that have been with us since the beginning of time. It makes it, in a lot of ways, much easier to get away with, to pull off.
That's exactly right.
All right, so closer cooperation among national securities and regulators. I wonder if we're ever going to live to see the day where the SEC and the CFTC, their regulatory market functions, are actually merged together, and we see them kind of acting as one. I mean, it seems they were deliberately bifurcated to interfere with regulatory functions.
Well, there have been many proposals over the years to merge the two, and there definitely is some overlap. And when new types of securities have arisen, there have been questions over which of these two agencies is in charge of them. What I think of is, around the turn of the century, derivatives emerged, and there was some question for a long while who's in charge of them. And eventually the CFTC took control over that. So why we have two different agencies regulating our financial markets, it's for long lost historical reasons. I would say that both have had their ups and downs, And, it really depends on the people there, like anything else. So when each agency has been competently run, they've done good things. And when they've been incompetently run, such as, from 2005 to 2008, I would say, you've had a lot of harm done to the market.
Yeah. Yeah. Well, it goes back to futures and options really being on agricultural commodities, right? And they weren't financial instruments when they were conceived. And then, of course, during the Depression after that, they kind of got rid of a lot of them, a lot of the really speculative ones. But this time, it didn't happen when the market collapsed. So, but it just makes sense that it's typical Washington style where you have multiple agencies all basically doing the same function and not doing it well. This is one of the biggest complaints about the Consumer Financial Protection Bureau. So they don't have responsibility for regulating anything that there isn't already an agency regulating. But yet, for some reason, they thought we needed yet another one. Anyways, hey, John, I think interesting times that we're in. If people want to find out more about you, read your work, where is the best place to go?
Sure. Best is probably the website. My name of my firm is Kelly Dry & Warren. We're the second oldest law firm in New York City, and you can find out more about us at kellydry.com. All
right. Excellent. Yeah. And we'll have a link to your site in the show notes of this interview on Financial Survival Network. And make sure you send in those emails, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. And John, thanks so much for coming on. We'll talk to you again soon.
Thanks for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.